Hello traders and welcome to another video review. Today is May 1st, 2024. Let's find out what's going on the Forex economic calendar today. Data overnight was very poor. Only the New Zealand data are the one that is worth mentioning. Employment change, unemployment rate, AIG manufacturing index and some speech from the governor were present overnight. This is a mixed bag of data. Most likely employment change is lower than expected, 0.3%, with actual number of minus 0.2%. During the London session, we got only the data from the UK nationwide HPI, which was released already, and we are still waiting for the manufacturing PMI data from the UK. This data is scheduled for release at 10:30, and the market participants expect a drop from 50.3% to 48.7%. So we will definitely take a look at the British pound today. ADP Nonfarm employment change is scheduled for release at 2:15, and this is one of the most important events of the day. Nevertheless, we still have the global manufacturing PMI and ISM manufacturing employment scheduled for release at 4 o'clock. ISM manufacturing PMI, another very important data release. Manufacturing PMI in the US is expected to decrease from 50.3 to 50 points, and the ISM manufacturing prices are expected to decrease from 55.8 to 55.5 points. JOLT job openings is another very important data release scheduled at 4 o'clock p.m. There you go. Then we got the crude oil inventories, crushing crude oil inventories, and the event of the day is the Fed interest rate decision, FOMC statement, and interest rate and the FOMC press conference. This is the main event of the day, and it's scheduled for release at 8 o'clock and 8:30 respectively. So as you can see, London session might not be that interesting. Nevertheless, today's New York session very interesting, including interest rate decision. The market participants expect the interest rate decision to stay at the level of 5.50. So no hike, no cut is expected this time. So if there's any change to this, markets might get violated. All right, so let's get to the technical part, and we are start with the euro dollar. So the euro dollar is quite quiet ahead of the major data releases. As you can see, we've been rejected from the levels roughly around 1.0754, 1.0742. We are now trading very close to the level of 1.0657. Market broke below at the level of 50 on the RSI as well, and the RSI is now at the level of 36 points in the week and negative, which means the bears are in charge of the market this time. The next target for the bears is located at the level of 1.0602, and this is the swing low from the April 16, 2024. So only a sustained breakout above the recent high as 1.0753 and then 1.0794 might change the short-term outlook to more bullish. Otherwise, we should expect continuation of the downslide. Cable is as well trading lower. The breakout above this trend line, let me just show you guys this trend line, what I mean. The breakout above this trend line was a fake one. Even if we change the trend line, right, so and we adjust this trend line to the other data, even here, then this is a very weak trend line, but it's still the same situation. The market reversed and now it is moving lower. So we apparently are approaching these levels on the 4-hour chart. 1.25, so 1.2450, then another support is 1.2423, then the other support is 1.2375, and eventually 1.2365. So this is like a 10 pips zone. Now we broke below 1.2484, and this is the intraday technical resistance. Please notice that we are trading below trend line, below 50 and 100 periods moving average, and the momentum broke below the level of 50. Now we are definitely under the bearish pressure because the momentum is weak and negative. lower levels are expected on the British pound. Let's find out what is going on with the US dollar to the Japanese yen. As usual, we can see the continuation of the uptrend, despite the fact that the intervention of the Bank Japan took apparently, let's just take a look how many percent it was good for. Let's say price range. Let's set the price range. I think it would be something about 5%, not even 5%. This is 3.5%. So yeah, that was good for the 3.5%, and the market is still moving up. Right now we are at the level of 157.95. The swing high is 160.20, so there is less than 300 pips to the top basically, and the momentum is right now back towards the level of 70. Right now the number is 65. Momentum is strong, it's positive. It looks like we are going to move higher very, very soon if that sentiment prevails on the US dollar to the Japanese yen. Because of the data from the US interest rate decision and so on, let's just find out what the S&P 500 is doing. A very clear picture here. Local high, swing high, correction towards the 100 periods moving average, roughly around 4,969. This correction hits the extremely oversold conditions, bounce from the extremely oversold conditions into the 50 points on the RSI, reversal from the neutral zone, reversal on the chart as well, and we are now approaching the 100 periods moving average again. So it looks like if there is no surprise here for the bears, they might continue this movement even lower. Let me just find out the levels for you guys. 4,953 is the technical support, and of course the resistance would be then located at the swing high, 5,274, and the local intraday resistance is located here at 5,122. With this kind of a behavior of the momentum, lower levels are expected. And because of the oil data, let's just figure it out at the end. What is oil doing? On the daily time frame chart, this time we can see we broke below the level of 50 on the momentum again. We are now trading at the level of 40, and it looks like the market wants to go lower. So the demand zone located between 80.28 and 80.83 will be tested again. Any breakout lower expose 100 periods moving average on a daily time frame chart, and even if we get even lower, then this, let's say, corrective zone here, horizontal trend zone here between 78-79 is the next target, with the low at 76.79. Momentum is negative. It's a weak momentum on a daily time frame chart. Bears are in charge of this market, so we should see lower prices that might accelerate if this very narrow zone here, demand zone, is violated. Then of course we might see some kind of even sell-off or something like this, especially if there will be some trigger from the fundamental side, which is the crude oil data that are scheduled for release today. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.